Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. So in today's video we're going to look at TSM. TSM is Taiwan Semiconductor. It's one of the best companies out there, the biggest companies out there, and we want to see there if basically they just released their earnings report just yesterday. So I want to talk about a bit of that and see if I should still hold this business in my portfolio, or should I sell it? Should I do something else with that money? So that's basically what we're going to talk about. But before we do that, just want to let you know my overall portfolio has not been performing well in the last few days. Again, it just shows, I think at one point it was like 43 something, and right now as you can see it's just 42 and 111 pounds. So yeah, it's basically down there a bit, and that's absolutely fine with me. Obviously it would be nice if it was up, but again it does happen, and that's the stock market for you. Okay, right, let's talk about more about TSM. So Taiwan Semiconductor is based in Taiwan, is one of the biggest companies out there. It's basically what's called a foundry. They don't actually design the semiconductors, they are one of the companies that make it. So AMD and Nvidia and all of these companies, they design it, then they pass on to TSM, and then TSM basically manufactures the actual chip, and that's what they do. So I was looking at this morning and I thought, let me just basically jump on the mic and just have a quick chat with everyone and just say what I think about what's happening to this business. So in the last basically year, the business is the stock is up about 10%. Okay. And as you know, right now, there's a massive shortage of chips, if you like, okay? And there's a lot of companies, like, for example, companies that make cars, like GM and Ford and whatever, that came out recently and said because of the chip shortage, they can't actually produce new cars. Hence why price of old cars or used cars have actually gone up. So it actually is having impact, and this company is in the right place because all these companies that developing the new chips and trying to make manufacture, basically TSM will then take that and then make it for them. Obviously they have to pay a price. So they've just released their earnings, and one of the things that basically the highlights for me, that was the highlight, is basically the fact that they are planning to spend about 40 to 44 billion basically US dollars, okay, in capital expenditure. And the reason for that is because of the demand. So as demand for semiconductors continues to surge, a problem exacerbated by the ongoing pandemic and simply chain crunch. And because of that, they've decided to increase the expenditure. Now, when a company, I don't really like when companies just spend money for the sake of spending, but in this situation, they actually are doing good with it, and we will look at that in a second, okay? But the other thing I want to talk about very quickly is the actual earnings report. So they reported basically they've earned $1.15 pence per share, and then about 15.74 billion in revenue. Now that's up about 24%, over 24% year over year, and the estimate basically they have beaten the estimate when it comes to the earnings report, but obviously when it comes to the revenue, slightly down. Okay, and gross margin for the quarter was 52.7%. Okay, and operating margins was 40. This is very high, 40, almost 42. Okay, and net profit margins was almost 38%. This is really huge. Okay, this is huge. Normally, obviously, because it is a tech company, it's a growing business, and it's in the right industry, and for that reason, this is obviously in line with what you can expect. But even if you look at the Nvidias and if you look at the AMDs, whatever, they don't actually have this kind of margins, and this is brilliant. This is one of the reasons why I actually started investing in this business. Okay, so let's now have a look at, so the fact that they're spending about almost $44 billion in the next couple of years, basically this year, in fact, to actually create more, just to create capacity, basically to increase their capacity to produce those chips. That's amazing, okay? Because they realize there's a shortage. They're now going to create the more basically get the infrastructure ready so they can create basically the capacity to utilize basically of what's going on right now in the market, okay? So According to Morningstar, it's 4-star. They've now updated their guidelines. Okay, so their guidance basically for this, I think initially was about $140 per share, $45 per share, but they've updated last night or just today, and they've now updated it to $179 per share, and currently is $139 per share. It has a wide moat. What that means is this business actually has a competitive advantage over their competitors, and that is absolutely amazing. Okay, so here, this is basically one of the things that I just want to highlight in here. Okay, so TSMC surprised us with a capital expenditure budget of $40 to $44 billion, topping our basically October 2021 estimate of $38 billion US dollars. Okay, and that represents about 33 to 44 increase over 2021, and it says over 70% of the budget will be spent on cutting edge processes, so 2 to 7 nm, which is a nanometer. Okay, 10% on packaging technologies, and the rest on the mature technologies. For example, 28 nm process. So they've realized, okay, this is what's needed. Okay, and that's basically where they're spending the money on. Combined with the management expecting a high medium-term revenue of compound annual growth rate of 15 to 20%, versus 10 to 15% last year. So it's actually huge. So from 10 to 15, right now they're expecting 15 to 20%, which is very good. So the aggressive budget cements our view that TSMC will be the key beneficiary of the multiple semiconductor growth drivers, like the autonomous driving, HPC, which is high performing computing, and 5G. So because the autonomous driving is now becoming a thing and everyone wants to get involved in that, the high performing computers is also needed at the moment, and the 5G, for that reason, okay, they are now upping their basically expectations or their fair values. Okay, so that's why they've increased this. And this is amazing. They carry on and they talk about a couple of other things. Right, so the next thing they talk about is this. We note 2 long-term growth factors for TSMC. First, the recent consolidation of the semiconductor firms is expected to create demand for integrated systems made with the most advanced nodes. For example, major customer Nvidia is acquiring an ARM, which is a UK-based company, to consolidate intellectual property and bolster higher end offering in data centers. Now, data centers, artificial intelligence, and AI, and the Internet of Things. Okay, so that's basically, so this is now all the new buzzwords that's flying around, and then that's what Nvidia is involved. So Nvidia is now obviously trying to target the data centers, artificial intelligence, and Internet of Things. Those are the 3 main things they're targeting, and obviously Nvidia will design those chips, will pass on to TSMC, and TSMC will actually manufacture those things. Okay, second is the organic growth of AI. Okay, Internet of Things and high performing computing. And these 3 things, organic growth just means basically a lot of these companies out there are now basically, especially companies like Qualcomm, Broadcom, and so on, they're working on the artificial intelligence, Internet of Things, and high performing computers. And for that reason, who are they going to go to? Actually, once they've designed those chips, who are they going to go to? They're going to go to TSMC. And this is why this company is absolutely by far one of the best in the world right now. They're in the right market, and this is the right time. And the fact that they're spending up to $44 billion to increase their capacity so they can actually meet the demand, that's perfect. To me, that is music to my ears. This business is great. Now, so that's basically what I wanted to talk about generally, the fact that they had a great report, okay, and the fact that they're spending a lot of money in research and development. They basically creating a lot more value for shareholders. That's the business that I want to be in. So a couple of things that we're going to look at now, okay, and that is just to kind of show you that in terms of growth wise, I don't think Yahoo Finance have updated this yet, okay. but hopefully once they've updated, we can see, we will look at that again maybe. But for 2022, Yahoo was basically finance was expecting about growth of revenue growth of basically 31%, which is absolutely brilliant. And then you look at the growth estimates for basically next year, which is basically this year that we're in now, 2022, and then for the next 5 years, you're looking about 19.40% growth. Okay, in terms of their target price, I think this will be updated definitely in the next couple of days. Morningstar has already updated that information, because as you can see here, it's updated January 14th of January basically, which is today. But I think the Morningstar hasn't, Yahoo Finance has not updated that yet, and you can see it's still up basically. Another $6 up from where it is. And the same thing goes for Simply Wall Street. So they're expecting it to be $149 per share. I don't think this has been updated. And if you look at the as well, tip ranks is moderate buy and $144 per share. And there's not that many analysts that is looking at this, which is very interesting really. And this is probably one of the reasons I actually do like this business, and I have shares. Okay, I've got 13.7 shares in this business. Basically, my cost basis right now, average cost is £87. Okay, and that is in pounds. But in total, I have 1,191 pounds in this stock. Okay, I'm up about almost 200%, 200 pounds. I wish it was 200%. And almost a 16.58%. Now, while I'm actually holding this stock, I will also be getting basically £16 per year basically in this business. Now, the fact that it's undervalued, the fact that what I've just read in Morningstar is basically almost like music to my ears. Okay, I absolutely will be adding to this business, and I like it. The only issue I have with this company is the fact that I cannot buy it in my ISA account, because it's in the invest section of Trading 212. I wished I could buy in my ISA, because then I could have bought. Honestly, I would have bought more of this business instead of Adobe, right? And just to keep it in here. But unfortunately, I can't, and I'm worried about the taxes that I need to pay for later. So I'm still gonna buy it in Trading in Freetrade. Okay, I'm hoping that one day they will make the change. I don't know if it's government thing, the fact that you can't actually have it in your ISA, but whatever the case might be, it's a great business. I absolutely love it. I'm gonna hold on to it for a long time. And while you're waiting and holding, obviously that you get, I think it's about 1% dividend. So let me have a look at quickly. Yeah, 1.35 dividend, and the payout is very low, which is great. And if you look at the how safe the dividend is, it's about 62%. Now, even though that says it's safe, I don't think it's 62%. I think it's higher than that, because the company does have a lot of cash in the bank. So I don't think that's the case. But even if it is 62%, it's still a safe, and they're growing their dividend. It's not great, but they do grow their dividends. But I'm not buying this business just because of the dividend. I'm in it for the growth side of it. Okay, let's just make that clear. Even though they do pay some dividend, which is absolutely brilliant, okay, I can keep it in my portfolio. Right now, I'm in it for the growth. Okay, so hopefully we'll see in the next 5 years how it goes. If the chip shortage continues and then they start expanding, to be honest with you, they are basically the market leaders. So Samsung and this company have taken 50% of the market, and mainly this company is actually the company that works with probably majority of the US chip makers like Qualcomm and Broadcom and so on, in AMDs and Nvidias and all of them. They work with TSM, and that is something that I'm definitely happy with. Okay, so I hope you enjoyed the video. If you like this kind of quick short video to kind of give you an idea of what I think about the latest earnings report and the fact that I'm absolutely bullish on this company, and we'll see how it goes. I hope you enjoyed the video. Please like, subscribe, and let me know if you have any questions. The more likes the video gets, the more people can hopefully see, inshallah, and the more brothers and sisters we can help. I hope you enjoy. Take care. Assalamu Alaikum.